Hello everyone and welcome to this session. As Liam says, this is a session on data and capital, so big, juicy, bold title and lots for us to get stuck into. As I said, we got a stellar cast for this one. We got almost an hour, so I think we could probably spend an hour on bios alone, but I think Liam's just talked us through it, but I'm just going to do a quick, slightly deeper dive on everyone we've got here. So we've got Dr. Carl Long, President of the American University in Dubai. Dr. Kyle, internationally recognized author, scholar, strategist, advising global stakeholders on university governance and development. Now, Dr. Kyle is going to help us think about what education looks like now and what it looks like in the future as we talk today. Next from Meta, we have Basma Amari, Director of Public Policy for MENA. She leads a team that focuses on regulation policies, platform integrity, all of that kind of thing for Meta, but her experience goes way back, and not just in MENA, but across Africa and the US, and of course you are the Prime Minister's office here in the UAE as advisor on strategy and innovation, so it'd be great to get your lens on some of these questions. Lastly, we have Bill Qian, Co-Founder of Cypher Capital, of course, our strategic partner for this event. Bill, you and I first met a couple of years ago. You do so many things, it's kind of crazy. You served as CIO for Phoenix Group, first listed crypto company in the Middle East. You were global head of investments at Binance. I remember our conversation on those days. Served as a board member of Ton Foundation, which of course is a fascinating, Ton, of course the open network is fascinating, basically built out of Telegram with so many interesting sort of issues that throws up around it. And I think, Bill, we'll start with you if we may. Sure. As I said, this is such a big, I should also mention, by the way, that Bill has a very successful podcast called Bill It Up with over 300,000 subscribers. Yeah, we have some rock star CVs for us today.
Thank you.
It's not the kind of panel that says data is the new oil or uses the word lifeblood. We're a bit more advanced than that. So yeah, Bill, just to get your perspective on the big picture, so that we can talk first of all about kind of where we are before we zero in on governance and before we zero in on education. You often talk about making complex frontier tech more accessible, and I'm sure there's plenty of people in this room that are trying to kind of get their heads around where we are. We're kind of moving at mad warp speed through this disruptive cycle that we're in. And I'm sure this audience has kind of varying levels of familiarity and expertise with some of these technologies. So can I ask you first, what steps can institutions or individuals take to get to grips with this and to prepare for the next wave of digital transformation?
Yeah. Well, I think we are in the middle of the fourth generation of the Industrial Revolution, in a sense. And before, when we talk about the previous Industrial Revolution, it's kind of like artificial muscle. The steel, oil, everything, basically it will enhance your capability to deliver something by the engine, in a sense. But in past few years, with the innovation of the internet and artificial intelligence, we're getting into a technology revolution from artificial muscle to artificial intelligence. And I do see, right now there are two frontier technology which are enable and reshaping the world day by day. The first one definitely we are very familiar with is artificial intelligence, and I do think AI pretty much enable every single industry, and every single industry will have like more than 10 value chain, and we will come across thousands of AI unicorn in every certain value chain. On the flip side, one side I think AI is redo every supply side of the economy. But in the end of the day, every single business will be a format of an asset, in a sense. Some of the business will become an equity, a stock. Some of the business, is a currency. Some of that is the commodity. And I spent the early stage of my career in internet, and then, I spent 5 years in blockchain. I work for, CZ, my ex-boss, who is the richest man ever go to jail before. And, recently he got the good news, got the license from Abu Dhabi. So blockchain, I think, is kind of yin and yang. Yang is AI, yin is blockchain. And the blockchain is, basically build up a global, worldwide open computer where, all the data, all the information is permissionless. and you can transfer, the data, codes, and the value on this open-end internet, which is pretty much, a new paradigm. And that one is redo every single asset class of the humanization. When we talk about the stable coin, and now, the NASDAQ want to go to blockchain as well. So pretty much, from currency to equity to commodity, blockchain is redo every single asset class. Yeah, so this is my view about, those two big shifts of the technology, how they enable the global economy.
So one more question just on that point to pick up there. Can you talk a little bit more about this convergence? Are there any other elements beyond AI and blockchain? People talk a lot about how it's not there yet, but quantum could change this, how robotics could change this. Are those all things that will kind of be built on the infra layer of AI and blockchain, or are they sort of big forces in their own right that will change the landscape going forward?
Yeah, well, I think it depends on what kind of industry. For most of the industry, every industry, their value chain can more or less enabled by AI. That's why we can see AI is helping us every single day. I guess here most of us we use the ChatGPT and Gemini every day, and because in the end of the day, AI is sort of a reshaping the intelligence. Having said that, the blockchain would be a sort of more niche technology, because in the end of the day, it is an open-end computer which can redo the finance for each sector. And we see there's a stable coin and the stock, etc. So I think blockchain usually it will happen in finance, and it's kind of like open finance 2.0.
Okay, Basma, I'd like to come to you next. So Bill has talked about all this innovation. How do you get to grips with the need to sort of mitigate potential harms such as misinformation, bias, all of these other things that come with the dawn of a new technology? Maybe not the dawn, but the evolution and maturity of a new technology and its the way it spreads to a mass audience. How are you at Meta trying to get to this?
Thank you very much, and thank you for having me. The first thing that I think we need to recognize is that AI is not something new. So artificial intelligence has been there. It's the engine behind what you see on your phones. It's the engine behind what you see on the apps. If you're on Instagram or on Facebook, the content that you see is powered by AI. So it's been there. What Meta does is a series of things. Some of them are in the design of the products that we launch. So from the early stages of design, integrations of guardrails and safety mechanisms are built into these apps. But beyond that, we, us and others in the industry, but Meta has a set of very stringent community standards that we follow to protect the user, be it misinformation, be it other harmful content like hate speech, violence and incitement, among others. So these community standards are what govern the content that is posted and the content that is often removed, reduced on the platform to protect the user first and foremost. When it comes to misinformation, it's a tough one, and it becomes more and more difficult with AI. We work with, globally, outside of the US, we work with third-party fact checkers to, and they independently review the content or some of the content on our platform. And based on these reviews, this content's either removed, reduced, or the user is informed that this has been fact-checked by a third-party fact checker, and basically telling the user that the content that you're looking at could be misinformation. Maybe I'll stop there, and then we can talk a little bit more about regulations.
Sure, absolutely. I mean, I guess one of the questions is is AI like previous technologies, and can it be handled in the same way? And does the thinking exist yet that can help to govern some of these issues and mitigate some of these issues? I know there are also a plethora of different organizations cropping up to put forward their own ideas and compound the thinking in this space. Do you have a perspective on that? Do you think that the tools exist yet for us to handle AI as a platform?
It's a tough one. So as technologies evolve, definitely the job is getting harder. The job is getting harder. There's no hiding that. What we tend to do and what we're trying to do as an organization, as a company, is work with the industry with the industry players, but also with government players, with different players, smaller players in the industry, to agree on a set of standards for AI, to agree on how we will work together from the get-go to integrate some mechanisms into the platforms to mitigate some of the emerging risks that we envision for AI. It's a rolling ball, and this is an ongoing conversation. But yeah, this is something top of mind for the company from the development phase up until to what you see on your phone.
Cool. And you talked about how it's kind of a race to catch up with the technology in some ways. And I talked to lots of people in the cybersecurity field about this being sort of trying to almost catch up with where technology is going. Dr. Carl, by way, I'll get to my question, but I'll just say a little story first before I bring you in. A friend of mine is in the cybersecurity space. He's a 22-year-old German lad. He's moved to San Francisco, and he set up an AI-powered cybersecurity company. He's just been funded $5 million in a round led by SUSE Ventures. When he was 16 and he was in Germany, he sued his local school board on the basis that he shouldn't have to go to school, on the basis that he wasn't learning anything. He's one of those kind of people. And he won. And then at 17, he hacked Tesla. He did a white hat hack of Tesla. And from Germany, he started opening the doors of Teslas in America. He actually did it through Twitter, and he found owners of Teslas, and owners of Teslas are generally early adopters, and they're generally up for stuff. So he said, "I'm going to hack your car. Is that cool?" And they said yes, and he started turning on Teslas in America. And he told Bloomberg about this, and Bloomberg covered it quite extensively, which meant he got a very small bug bounty from Elon Musk. He only got a $500 bug bounty instead of $50,000, but it did mean that he got a name for himself, and he came over here, and he spoke at World Government Summit, and the Crown Prince was very impressed and so on. And that launched him on a speaking career. He then went over and built this company. This is a long-winded way of asking a question, but also recently I was on a podcast with School of Humanity, and I was talking about how we need to raise kids to be CEOs at 17 because they're going to have this agentic workforce and have the ability to do all of these things. As I say, a long-winded way of saying, what's your view on how we should be preparing kids for the future, how we should be making sure that some of these folks who are readying themselves for the future, that our education system is still relevant to them, it can still help them, nurture them, and set them up for success in the modern world.
Yeah, thank you for these examples. I hear these from time to time. We hear about the entrepreneurs, young entrepreneurs who get approached by the Peter Thiels of the world and are offered $1 million to not go to college. This is the kind of example we're talking about here. One of the concepts I like to reflect on when thinking about the relationship between the rapid evolution of technology that we're facing today and the role of higher education is Moore's Law. How many of you are familiar with Moore's Law? Okay, a couple. So Gordon Moore was the founder of Intel, and about 50 years ago, he observed that the number of transistors on a chip doubles roughly every 2 years. Right? And so we take this now as a bit of shorthand for how quickly technology becomes obsolete. Right? And so I think that if we're going to give young people a very good university education, there's no point in basing the entirety of their education around technologies that will surely become obsolete. We need to be providing for them an opportunity to gain the knowledge and the skills that are enduring, right? The capabilities, the dispositions that will not become collateral damage to Moore's Law. And so the sort of practical implications of that for university are a few things, I would say. The first is that in the UAE, universities have become quite adept at working closely with industry. It's sort of built into the fabric of the higher education sector here, and I think that a number of the other countries in the region are also experiencing a little uptick in engagement here, and I think that this is something that we're already doing well. Things like industry-led advisory boards, co-developed and led courses, projects and challenges with industry. These have become sort of second nature in the higher education sector here. So we're already doing that well. Universities and the private sector need to continue to deepen those relationships. The second thing, though, is when it comes to things like artificial intelligence, data literacy, we need to make sure that these are skills that are embedded across the curriculum. So at our university and so many other universities in the UAE, in the region, and around the world, you're starting to see the development of AI programs, right? So of course, students who go through these programs are going to walk out the door with this skill set, but it is not the case that this is the entirety of our student body. You know, we just rolled out a new AI and business major at the university. It's quickly become our most popular major, but still under 10% of our students are enrolled in this program. We need to make sure that no matter what a student studies, whether it's engineering or communications or psychology or education, that they're walking out with a sufficient sort of threshold of AI and data literacy. So these skills need to be embedded throughout the curricula. And so I think the point to the sort of the main takeaway here for me on the relationship of the university to these technologies is that you know, we can't sort of throw the baby out with the bathwater. There's a lot of good that we're already doing, and I think it just compels us to sort of double down on that. American universities have been, in the United States, have long been of such public service to the nation and to the world because they were developing not straight technicians who were drilled only in one technology, but well-rounded individuals who could approach problems from interdisciplinary nature. That sort of liberal education is a sort of cornerstone of the American higher education system, and I think that an artificial intelligence-led economy will require us to sort of double down on that approach to higher education.
You talked about the public-private initiatives and how essential that is for education establishments to work with business and have that fluency and that knowledge exchange between them. Could you give a couple of examples of ones you've seen work really well?
Sure. One of my favorites is something that we're doing with Amazon. Do we have anybody from Amazon in the room today? Maybe earlier. For the past couple of years, we've been working with Amazon on something that they are doing called the Transcend Innovation Challenge. So Amazon works with us and a number of other universities in the higher education sector here in the UAE on not a case study of something that's already been done or a simulator, but a real-world business challenge that they bring to us, a problem that they have and they don't know how to figure it out. And they give it to university teams. They say, here you go, young people, figure this out. And they work with them as mentors along the way. This past year, just this fall, only a couple of months ago, one of our students at the university, a computer engineering student, took up a challenge that Amazon had around, they're struggling with the fact that there's a lot of Gen Z opportunity out there, consumers out there that aren't really engaging with the Amazon platform. They're not actually doing the shopping on Amazon. How do we convert Gen Z into customers? And so by using some AI tools that they provided for us, our team was able to determine that we need to create something called Amazon Vibe. Right? You can vibe with Gen Z a little bit better if we can make the product more conversational, if we can make it a little bit more personalized, if we can make it a little bit more culturally sensitive. So our students build a product called Amazon Vibe that led to first place in the challenge, and now that means Amazon actually has a product that they can bring to market should they so choose. But the idea here, and what I think the main takeaways here are, is that by getting industry engagement with the university early and often, we've been doing this now for a couple of years. Our winning team this year was a participant last year and didn't win. And this year won, because now they've been doing for a couple of years now, they've gotten that kind of exposure to the private sector. That creates these sort of pipelines of talent for industry. This is something that's scalable. A number of different organizations can work with universities on this sort of thing. So if your firm or your organization is not actively working with universities to help you to solve some of your business challenges, I would encourage you to think long and hard about that. And if you have something that you'd like to discuss, I'd be happy to talk with you afterward.
Thank you, Carl. Bill, I'm going to come back to you on a couple of things we discussed. For this session. One of the things is, from your vantage point across global markets, what regions or sectors, just to narrow it down, just to dive a little deeper, what regions or sectors do you think are currently showing the strongest momentum, strongest appetite in Web3 institutional adoption across Web3 technologies? And
I can put some comments on the blockchain and Web3 and technology in general. I think right now in general the U.S. is become still the center of the innovation in a sense, and regardless it's AI and also the blockchain, we can call them as a innovation center. But simultaneously, when we go to AI, yesterday I just saw news, Facebook kind of Meta also began to work along with Qian, from Alibaba, right? For the LM model as well. So that's a collaboration between the Pacific two country, and also DeepSeek, give everyone a surprise by beginning of this year. So I do think, for the AI. There is the U.S. as a center, but also there is some kind of a AI corridor across Asia and also here. Same thing happened in crypto as well. Crypto, right now this season, I think for like Coinbase, Bitcoin, ETF, etc. Most of the innovation happening in U.S. But simultaneously, we see there are some kind of innovation corridor as well. Like globally, Binance contributes 60% of the trading volume. Last year, Binance trading volume is 2x of Nasdaq, and now Binance is regulated in Abu Dhabi. So basically, ADGM as a crypto regulator becomes the largest crypto regulator in terms of the volume, because SEC monitors the Coinbase, right? And Coinbase is way less than Binance regarding the volume. Yeah. So I do see, going forward, it's going to be a sort of a parallel, picture. U.S. will contribute a lot of innovation from AI and blockchain in a sense, but also like UAE and Asia become a very important innovation corridor outside of U.S. to make up the rules and also to get involved in the innovation.
Yeah, it's interesting. I was in China for a couple of months. I was in China for a couple of weeks, a couple of months ago. We went actually out with Investopia, which many of you may know. It's His Excellency Abdullah bin Tuq and the Ministry of the Economies investment platform. We went to Hong Kong and we went to Beijing, but we also stopped in Guangzhou, in Shanghai and Shenzhen. And the technological innovation that we saw, particularly in areas that the West is not currently famous for, or is famous for tackling in a different way, particularly around GPUs, like carbon nanotube GPUs, work in that area, all of these kind of very interesting areas. The work that's being done in robotics was incredibly impressive. So it was an interesting reminder that while Silicon Valley certainly leads in many areas, there's a whole other ecosystem that is being built. And these corridors that you're talking about that are being nurtured by the US into this place, into different places from here to India, are producing really interesting results already. This week, like many of you, I was at ADFW, but there was also Bitcoin MENA. There was a global AI show. There was a global gaming show. There was one other. There was Bridge, of course. Yeah. And so all the talk was of a confluence of entertainment, sports, content, digital currencies, and how companies had to be essentially evolving to embrace a different way of presenting themselves to the world. That was the kind of lesson. How media in its old form was being replaced by influencer marketing, by digital media, by new approaches to content, new kinds of brand endorsements, and new ways of running the business that are much more digitally enabled. This is a big topic, but so is our topic for this panel. Do you have any thoughts on this? Because you run a very successful podcast. Obviously, that's great for marketing your business, getting you known. Do you have a sense of how companies should be maybe a little bit more, should they learn anything from what we've seen this week in Abu Dhabi, where it's all about, okay, how do you talk about your own innovation, your own evolution in new and interesting ways?
Yeah. I want to take a reference of the most important paper of the AI in past few years. The thesis of the name of the paper name is "Attention is all you need," and I think this thesis name is a good reference for all of us as a business leader to take a reference. Yesterday, I just took a look of the Elon Musk follower number on Twitter. It's 230 or 220 million, and then I compare with Taylor Swift on Instagram. That is 280 million. And I feel like, if Elon Musk and also, Ray Dalio has millions of followers on YouTube, and I found that, all those business leaders, they become, a KOL for themselves. They become the chief marketing officer of themselves. And we don't have any excuse to, sort of hide behind the scene. And all of us, all the individual business leader, I think, we have to present ourselves and we have to show ourselves in a sense. Because, why Warren Buffett doesn't invest in newspaper anymore? Because, in 1980, newspaper is kind of a dominant of the media. And if you invest in the top 3 media industry, AKA the newspaper in some certain city, you dominate the speaking power, you dominate the media. But now, it's kind of a very distributed world, and every single people, can become your own KOL. Look at, the Mr. Beast, right? He is as famous as Tom Cruise or even more. So I think, the message or the takeaway I got, especially after 10 months ago, I kicked off my podcast. I feel like, it is very valuable for everyone, to be more vocal, on the media, especially, at this point of time. I have definitely Ray Dalio is one of my role model because, he is also in the finance industry. And I take a look of his history. And I found that, the first time he began to be vocal is 50 years ago. Because 1975, he began to send over the Ray Dalio daily observation to his clients. So basically, he became famous before he turned to success. And I think this become a sort of a premise, how we can build up our business and how we can make our business be more, observable to the public.
Right. And I keep hearing that content is far from saturation, and that there is, a lot more content that people can put out into the world before people are completely overwhelmed. I'm not sure how much I believe that, because I feel pretty overwhelmed right now. But I would like to ask Basma, as we're seeing this, as we're seeing a lot of content and now more and more synthetic content as well, and you have certain things like C2PA and other things which are, going to help with virtualization of people and personalities and AI-developed content. How for Meta, is there any kind of correlation between the volume of content as well as what that content covers? Is it still essentially the same challenge for you to deal with misinformation along the lines we've seen over the past 10 years as it will be over the next 10 years? Or is it very different in terms of how you're going to have to manage that and deal with it?
Look, I think the intensity of the issues is different. So when you're talking about misinformation, you're talking about deep fakes, you're talking about celeb bait, you're talking about fraud and scams. I mean, we all know somebody who's fallen for fraud or a scam on some platform, right? These networks are quite strong, and as strong as the industry is, and as strong as cybersecurity is for the industry, these networks are very, very strong. So what you are dealing with is one, you're dealing with problems at scale, and you're dealing with deeper issues that can be really, really harmful. Now, when we talk about the development of AI, or when we talk about the governance of AI, what we're really trying to do is answer questions around issues of privacy, very important questions about safety and well-being, questions about representation. How do we ensure that this AI is representative, that it's culturally appropriate? The world is very different, so there's no one size fits all. I spoke earlier about our community standards. These are global standards, but I could be in dealing with issues in Jordan that are very, very different from dealing with issues in the US. Yet the community standards are the same that govern sort of the content. So the basis is the same. The issues are more complex. And I mentioned the areas that we grapple with privacy, safety, representation, fairness on our platforms. And how we build AI, first of all, it needs to be built responsibly, meaning that that private information cannot be part of the data that's being trained. Fairness means I need to be building large language models, either in collaboration with existing models in Arabic or in the 200 languages from the African continent, to ensure fairness. So yeah, the issues are there. They are similar. They're much more deep.
Okay, staying with AI and talking for a little bit, speculating massively as I'm about to do about what may happen. In June 2025, the Federal Reserve Bank of Dallas released a projection about what might happen to the global economy based on per capita GDP. So the Federal Reserve Bank of Dallas is one of the 12 banks that feeds into the overall Federal Reserve. And essentially this line on a graph goes up in a very sort of linear fashion. And it's basically how the global economy has grown. And it goes up like this. And there are little blips on it when there's a world war or something like this. But the projection that the bank released said that sometime between 2026 and 2040, there may be a ASI event, a singularity event. And at this point, there are three possible scenarios. So AI is just another technology, and the line continues like this. The other two scenarios are that you get a very, 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 very sudden increase in automation and per capita GDP growth that goes up like this and starts to go almost vertical. And that's where you get huge automation, abundance, post-scarcity economics, and essentially UBI or whatever comes with it, right? So that's one scenario. Happens very, very, very fast. So socially and civilizationally, that would be a challenge to all of us, but that's what happens. And then the other one is that per capita GDP drops to zero, and that's kind of like your extinction scenario. But interesting that you have an economic body like the bank that's projecting these. I guess it has to, even though these things are low probability. But we have certainly an artificial intelligence doing things to the global economy which are going to be unprecedented and going to be interesting to witness. At the same time, it seems to me that you have a challenge to conventional business in the way that those businesses are currently set up. Because AI is going to enable you to do things that you haven't been able to do before. And it's going to help people who go into fractional careers because they'll have their own workforce with them. It'll help people who are maybe more independent. It'll present lots more opportunities. Kyle, as you sort of prepare the workforce for tomorrow and you have these different scenarios, I guess 20 years ago you would have prepared someone to go into a corporate business, right? Large amount of, most people would go into a corporate business. Are you still preparing them along those lines, or are you changing the way that you prepare people for all of these different scenarios, good, bad, whatever it may be?
I'll take the easy answer, which is yes and no. We are very fortunate at our university to have an extraordinarily high percentage of our students seeking to become entrepreneurs. And so many of our students are not looking for that corporate entry point after university. So we are simultaneously training people for startups, and not only to be founders, but also to have sort of startup readiness to support teams that might require a different skill set than would be necessitated by entry into a corporate environment. So that's always been part of what we do at the university. So we do have an entrepreneurship center, an incubator, where we're incubating businesses and so forth. But when it comes to the AI entry into this equation that you've provided, look, the main way to go about it is internships. So how many of you did an internship when you were in university? Okay, it's about, okay, I'd say about half of the room raised their hands, okay? And how many of your organizations are offering internships to university students? Okay, again, about a little bit more than half the room here. Look, these are the ways in which we can help young people to get exposed to AI. We can teach AI capabilities in the classroom, but learning them in the job, in the workplace, is the way that we can address some of these challenges. Because like the clinical experience of a medical education, workplace opportunities for students in other disciplines is part of the curriculum. No longer is it some sort of add-on. At our university, every student, regardless of what they study, is required to have an internship. And so now we're finding that more and more of our employer and private sector partners are wanting young people to have AI skills as part of their internship. And so now what we're doing is that the curriculum sort of looks like part one, preparation in the classroom, a little bit of theory, helping students to become equipped for that environment. Part two, having that experience in the workplace. Part three, going back to the classroom and reflecting on that so that they can analyze what they just experienced and have continuous improvement. And these are the kinds of things that we can do to strengthen industry when it comes to this challenge that you're describing. Look, with the World Bank, 3 different scenarios, I mean, we can't completely steer our ship of a university towards one of those scenarios. We have to prepare for all 3 of them, or probably, more honestly, scenario 4, 5, and 6 as well. Yeah.
Yes, indeed. But it's can I just drill down a little bit into more of you're preparing more and more students to be entrepreneurs in their own right. How do you go about that? Obviously not a traditional career, lots of challenges involved in that, and a whole breadth of skill sets required to be a successful entrepreneur. Could you talk us through that just a little?
Sure. We've been fortunate at our university to have, for the last 5 or 6 years now, an entrepreneurship center that was developed with the support of Dubai SME, in which students, they roll in 5 courses at the university. They go through our sequence of courses, and they will be able to leave university with a business license that they can get at a fraction of the cost as what they would get on the open market if they were trying to start a business here in Dubai without going through our program. But by becoming a part of the Entrepreneurship Center, you also get linked up with mentors and pitch opportunities and occasions to learn from VCs about what they're looking for. And we just opened up a blockchain academy in our Entrepreneurship Center as well. So there's a sort of like new tech opportunity to build programs there as well. One thing that I'll note is that we recently were approached by a couple of VCs who have in their stable some young rock star AI engineers, and these are the folks that would, in your early example, be college dropouts or not go to college at all. They've come to us and they said, look, we can continue to support these guys, and I'm sure that we'll make some money without them going to university, but just because they're good engineers doesn't mean they've learned everything they need to know to be successful in business. And so they asked about if we could help them to develop some custom programming that would help them to socialize a bit with other young people, to learn other skills that you might not in an environment that's just very AI driven, around storytelling, around branding and marketing, and all the kinds of skills that you would learn not only in a business school environment, but also that a comprehensive university has to afford, learning international relations and psychology and any number of different disciplines that you can develop some sort of skill and takeaway to influence your business.
Super interesting. So they basically sort of brought some of their more nerdy folks, and that's not a criticism. You'd be proud of being nerdy. My son certainly is. And you would, there was a genuine sort of, they really got as much out of it as the students did.
Yeah, absolutely.
Interesting.
Yeah.
Basma, so we're talking about all of this evolution, all this change. One of the things I wanted to ask you is, Meta is obviously focused on trying to drive the best outcomes it can. And one of the questions I wanted to ask you is, how are you leveraging AI for social good? And how is, what's been learned about responsible deployment so far? Because I'm sure that's just going to become a bigger topic as we keep going forward.
Yeah. It's one of my favorite topics, actually. It's when I look for reasons of why am I in AI, I look for the answers to that questions, which is social good. Look, the Meta offers a group of open source models. It's a mix of open source and closed source models, but the open source models are models that are made available for everyone. They are available for developers from across the world, to universities, to students, to researchers, and so on. And what this does is it democratizes access to very expensive technology and puts it in the hands of everybody, not just in the hands of few or in the hands of tech giants or in the hands of those who can afford it only. And what we've seen, and again, what gives me maybe joy when I speak about AI or when I think about AI, is when you hear about the stories coming from the region of small companies or even individuals or students who are building on those large language models. Just last month, there was a company from Egypt called Rology. Rology is a company that is looking for solutions to improve the speed and the service of radiology services from across the world. And what it does through, it builds solutions on the large language models of Meta, and it matches radiology results with some of the best doctors from around the world and puts it together and provides really good analysis to the user. This company, recently we had a competition called the Llama Accelerators from across Middle East, Africa, and Turkey, where different startups and different small and medium-sized companies applied, and what they provided was solutions to their communities for existing challenges in healthcare, in education, in agriculture, etc. And Rology was the winner of that competition across this region. And there are many examples. There are examples in education where solutions to students or advice to students is being provided on WhatsApp across sub-Saharan Africa from the teachers who adopt this or download this app. So yeah, that's just like a snippet of the many good stories that you hear from when you hear about AI for social good.
Great, great. We'll go to questions momentarily. Bill, just before we do, I'd just like to ask you one. You began by talking about AI and blockchain. So what's the sort of infrastructure level impact that you expect to see over the next 3 to 5 years from AI and blockchain combined?
Okay. Yeah. Well, I think AI, I like the story you just mentioned. It's going to be a big hockey stick, right?
Yeah,
Jason Wang from NVIDIA, he said, why the whole civilization economy we kept with $100 trillion. Why we cannot accelerate to $200 trillion, $300 trillion in the next few years? Because there's no sort of return rule that the whole global economy, the average growth is 2% or 3%. That is the industrial revolution speed, right? When we get into the artificial intelligence, why we cannot accelerate. So I think definitely in next few years, micro perspective, I think we have 8 billion population, but definitely we're going to have more than 800 billion agents and robotics globally. Agents, including the virtual one, right? Think about it, all of us, we have our, agentic model already. And going forward, we might have more. Each individual, you might have, a couple or even, hundreds of different agents, working along with you. So that's my point of view for the AI. I also want to share, if we look at all the biggest company at some certain age, usually that is the most high-tech company for that certain period of time. In 1900, the largest company who ever achieved $1 billion market cap is US Steel. So that company produced the artificial muscle to the economy, right? Because they built up the steel. In 1950, the first company ever achieved 10 billion market cap is General Motors, because they produce automobile. And then you come across, the GE and Apple, back to 2014, become the first $1 trillion company, and then NVIDIA. So I do see, there will be more than 80 billion or even 800 billion agents, work along with the 8 billion population. And also we might see a 100 trillion commercial entity over there. It might be Bitcoin, and also it might be another, artificial intelligence company. So this is my prediction for the AI. And on the flip side, for the blockchain, that is sort of the open finance 2.0. Bitcoin, everyone we know, it's digital gold, and then Ethereum is kind of like a next generation SWIFT or next generation Visa as an open public worldwide computer for the global financial transaction. My strong conviction would be, definitely Bitcoin will be on par with gold. So gold right now is 22 trillion, Bitcoin is 2 trillion. So Bitcoin definitely will go to $1 million each, because it's the digital gold for the next generation. I come across many friends who bring their son and daughter are in the middle school and want to get some advice from me for the crypto, and I am very surprised. Basically, the crypto / Bitcoin is their first ever asset class who began to trade. They don't trade equities, they don't trade bond in the middle school, but they trade crypto. So that's why I feel like the digital assets might be the native asset for the next generation. So apart from Bitcoin will go to 1 million in the next few years, I also see at least 1/4 of the global transaction will happen on blockchain. This is not only my vision, this is also the mission of Larry Fink, who is the founder of the BlackRock. Why he basically repeat multiple times of the blockchain and tokenization every single day, because he sees this as another level of the innovation as compared to by 1970, NASDAQ convert the paper trading to digital trading. But that digital trading is still happening in some box of the computer. It's segregated from the other computer, right? But if you can bring everything on the blockchain, in the next few years, we will see the stable coin will achieve several trillion circulation. Stablecoin company will be the largest treasury stakeholder of the US Treasury bond, and 20% of the global transaction volume will happen on the blockchain instead of the traditional legacy computer system. So what does that mean? It means like globally we have 8 billion population, 5 billion internet user, but I swear 5 billion population right now internet user, 90% of them, they use Google every day, but they cannot buy Google stock. Because you have to be rich enough, you have to be sophisticated enough to own Google stock. Even you like Google very much, even you use a Google search. But with the Larry Fink and the BlackRock vision, they want to bring every single asset class to the blockchain, which is an open internet platform for every single one. So in the next 5 years, every single Google and Android and Meta user, they will be able to buy Facebook stock. They will be able to buy Google stock on chain.
It's a fascinating sort of picture you're painting. I think one of the, just before we go to the questions, I think one of the interesting things from World Government Summit earlier this year was His Excellency Al Olama was talking to Elon Musk, and a lot of the focus after that conversation was on the tunnels that Musk said he would build under Dubai, because of course everybody had driven to that conference and that was the thing that was on their minds. But the most interesting thing that was said, I think, was Musk painting a picture of nanofactories, self-replicating machines, robotics, and essentially limitless resources combining to produce a massive change to global GDP. And it was quite plausible. It's getting more plausible all the time. I'd like to thank our panel for a very lively conversation and some great insights, and thank you to everybody.